They're they're more easy than they are accurate. And so what I want to communicate here is there is tension between these two goals, uses of budgeting. In some of my favorite cases, if you take advanced managerial from me, in next fall or some other fall thereafter, we do a couple of cases. We do 2 cases on companies that do away with budgeting and talk about how they do that, because we are the budgeting kings of the world here in the United States. We expend more budgeting resources, more organizational resources on the budgeting process than companies anywhere else in the world. So you're going to see this. You are too. You're going to see this because it is done a lot. But the unfortunate thing is, due to political processes, very often, we're not getting as good of information up the stream as could or should. And so it's not really serving the purposes of the organization as well as it should. Okay? So questions, comments, concerns, random thoughts? Not a one? Let's turn the page. What's on the next page? Budgeting is generally done in this order. The first budget prepared is the sales forecast. Sales forecast. The sales forecast. Okay, so it's our friends that are marketers, marketing majors in sales. Those are the people who actually start off the budgeting process. And then number 2, operating budgets. Operating budgets. And those operating budgets include direct materials, direct labor, manufacturing overhead, and selling and administrative expenses. So all those T accounts down the left side plus selling and administrative expenses are operating budgets. Number 3, capital expenditure budgets. Capital expenditure budget. Anybody know what a capital expenditure is? What is a capital expenditure?
On the major equipment.
Purchases of major equipment, okay? Plant, property, and equipment purchase. Basically anything that can be depreciated would generally be considered a capital expenditure. So that's number 3, capital expenditure budget. And then number 4, pro forma financial statements. Pro forma financial statements. Pro forma spelled P-R-O dash or space F-O-R-M-A, forma, pro forma. It is Latin and means as if, as if. So we're going to prepare financial statements as if all those other assumptions that we've made in steps 1, 2, and 3 are true. Okay?
Pro forma financial statements?
Yes. Yes, pro forma financial statements. Yes. Jackie, can you name a financial statement? Just one? Anyone? Income statement. Love it. Denise, can you name another? Balance sheet. Adam, can you name a third? Is your telephone talking to you?
Yes.
Yes.
Statement of retained earnings.
Statement of retained earnings, and we're just missing one, Sadie. I know, because I shuffled the cards, so you don't know who follows you anymore.
Well, I knew I used to be right by him, and I was like, oh, surely he's not going to call me.
So income statement, balance sheets, and then he skipped around to the hard one. He took the hard one, statement of retained earnings.
Cash flow.
Statement of cash flows. Yes, the whisper was correct. The whisper was correct. So those are the 4 financial statements we would prepare, although the least important one is Adam's favorite. Well, not necessarily his favorite, but the one Adam named, which is statement of retained earnings. So the 3 that are the most important: income statement, balance sheet, statement of cash flows. Those are the 3 that you'd really be preparing as part of this process. The master budget, down there at the bottom, is just a big name for all of these budgets, all in one big, thick package that in a lot of companies is thicker than your handy handbook. Okay? The master budget has all the budgets in it, Alex. Okay? So far, so good. How exciting. Any questions, comments, concerns, random thoughts? Nick, not a one? Okay. Whittle Company then, let's go. Whittle Company, what page Whittle Company on? Page 272, rocking and rolling right along. Okay. Now, Whittle Company plans to sell. Now, first I will say before we start on this, in general, budgeting problems are a lot like other problems. They're just in future tense. So this is kind of familiar stuff in future tense. Typically it involves following the instructions, just doing what they say, doing the math, calculating the number. Okay? So which is why we don't spend but a day on it in class, me quote unquote teaching you anything, because for the most part it's not that difficult. It shouldn't be. Whittle Company plans to sell 4,600 units in October and 5,000 units in November of 1997. The beginning inventory of finished goods on October 1st is expected to be 650 units. Whittle has a policy of wanting to have 10% of next month's sales as ending inventory. How much production should Womack schedule for the month of October? And you know what I want to do, Erica? I want to draw a T account on the board. Would you have any smattering of a guess as to what T account? Oh, well, let me draw the T account so to erase that mystery. But what label do I want to put at the top of that T account? What account can I put all of this information from this problem in? Yes, it is. So it's one of the three across the top. What are the T? Let's have somebody help Erica out. Shar just left. Tony, can you name all the T accounts across the top? Help out Erica. Direct materials, work in process, and finished goods. So it's one of those three inventory accounts. Yes. Are you collecting votes? Direct materials is not going to be correct, because let's look at what we've got here. We've got Whittle Company plans to sell finished goods. Yes. It's always harder when you're on the spot, always. And I know that. Josh?
Yes.
First number, where's it go?
It says you're planning to sell 4,600 units.
Yes, sir. So this is finished goods in units.
Wow, I'm drawing a blank on this one. Well, it says, okay, beginning inventory of finished goods.
Erica knows, Erica can feel your pain.
Yeah. Put 650 units on the debit side at the top of the T account.
Is that the first number? No, Whittle Company plans to sell.
I gave that one to you, but yeah, I don't know where that one goes, so I picked one where I do.
Okay, well, I'll take it.
The first one I gave to you.
And so what goes up here?
Yes.
What number?
650 units.
650 units. I'll take it. But everybody knows that, you know, Josh is leaving a harder one for you. Alex?
You bet.
4,600 units would be on the credit side.
On the credit side, because if you sell it, where does it go? Cost of goods sold, it goes out. How do you decrease an inventory account? Credit. Beautiful. Christy, you're next.
The 5,000 units they plan to sell in November also goes on the credit side? Is that what you're looking for?
Oh, well, what we need to do then is this October? We need another T account then, just